Good morning. It is October 14th, and the market should be opening as I speak. Let's see how the market opens. It should be a fairly calm day because we had the earnings season start last week. We had some big banks announce at the end of last week, but today we don't have a lot of earnings announcements. So we're going to have to wait till tomorrow, but trust me, for the rest of the week, we're going to have too much to talk about. We're going to have a lot of earnings reports starting tomorrow. And tomorrow's live stream will have several big companies reporting. I'll be able to talk about those as well as in the after hours. There'll be earnings announced. So there'll be plenty of news. We'll see where the market goes, depending on how good companies are doing and reporting. We also have China had some big news on Saturday. They announced that more details on their stimulus and how they aim to go about it. The press was a little disappointed that they didn't point everything out that they're going to be doing, but the news is positive that the government is really going to support the economy and begin to stimulate it over in China. Chinese stocks did rise. They went up about 2% if you look at the Shanghai Stock Exchange. So that should bode well for Chinese stocks. I'll take a peek at them in a few minutes. Before I jump into looking at the markets and looking at some companies that I thought would be interesting to take a look at, let me just invite you to become more active with the community. And most definitely, you're on the YouTube channel or Twitch, so you know about those particular outlets. But maybe you're not on Discord. If you are not, I encourage you to join. There's a lot of good communication going on particular stocks, and I really think it's a real big positive. I'm also on Facebook and Threads if you want to follow me there. And I'd also like to invite you to be a paid member of the community. And the paid membership does come with perks, so I think it's worth your while. There'll be a lot of things provided for your subscription, and would appreciate if you could take a look at that. It's in the details of the live stream description, and that is that. So taking a look at where we're at with the market, let's take a look at the US markets have opened. Let me refresh my screen, and it looks like the NASDAQ is out 0.56% higher. The Russell, I've got to give the Russell a half hour to kind of make up its mind on where it's going to be. It seems like the Russell really moves a lot. S&P is up slightly, and then the Dow is down slightly. It should be kind of a low volume day. And again, I cite the fact that we don't have any big announcements today, so we'll see how things play out. Let me hit my refresh here. Yeah, the NASDAQ's coming out of the gate fairly nicely. Looks good. When it comes to Asia, I've been really tracking China. Its stock market's closed. They're way ahead of me here in California, and their stock market went up 2%, which is a good sign. After the government announced their stimulus plans, the market rallies, which is good. I also read some reports that the inflows of investing into China stocks in the Shanghai exchange are triple that of the inflows in the S&P. So that's really, really high investment in China. There's a lot of investors moving from other regions, US to China or India to China. There's been some inflows going into China. We'll see if that rally continues to go. It's certainly a rally that could go for a while, since Chinese stocks were so beaten down. For 3 years, they've been beaten down. Are they going to rise? We'll have to follow it and see where that ends up. Okay, so when it comes to crypto, let me take a look at crypto. And for some reason, the crypto data on Google is not really keeping up, but crypto looks like it's at $64,650. And the reason that I wanted to point that out is it's doing quite well. It's gone up nicely, 3%. It doesn't mean much other than, for me, Bitcoin and Ether, it's a store of value. It's like, instead of me owning physical gold. I own Bitcoin. It's just a small part of my portfolio. It's good to see it rise, and it's doing well today. Interesting. All right. So let me say good morning to everybody. So, Android PC, I am doing well. Looks like SoFi is on the move. We can take a look at SoFi. We looked at SoFi in detail on Saturday when I was talking to Scott's Due Diligence. Tomas, good morning. Very good to see you. And then Shadow Guy, good morning. Yeah, appreciate all members and really appreciate your support. And it's really cool to be so active and hear from people. I mean, we're actively talking about our investments. I'm really getting to know each investor just by the types of investments you're in and what you're really striving to accomplish, which has been really, really satisfying. And then Android PC, good morning. So SoFi, HIMS, and SYM. Cool. So I'm not familiar with SYM. Maybe I'll take a peek at that one. All right. So let's take a look at it's a little early. So maybe I'll skip on looking at sectors because it usually takes a little while for this data to fill in. But no big surprise. Let's see here. Financials is really, really tearing it up. Healthcare is up. Financials, industrials, healthcare, real estate, technology is way down here. That's a surprise. Okay. Well, we'll take a look at that maybe in a half hour. Let's take a look at Chinese stocks. There was positive news on the Shanghai. Is that causing a rise in Chinese stocks? Nope. Alibaba is down. JD is up slightly. NetEase is down. These are the biggest caps in China. Baidu is down. Becky is up. So it's kind of a mixed bag here. I would say that on Friday, the Shanghai Exchange as a composite index, it traded down. The prices fell, but then Chinese stocks opened lower and then rallied throughout the day and ended higher. We'll see where they end today. We'll see if there's just more buyers and sellers or if there's more sellers and buyers. We'll see where the stock prices end up later today. All right. So a couple of things that I wanted to accomplish is there's one of the paid members sent me a request, and he's in the UK, so he wanted to take a look at a company out of the UK by the name of Card Factory. This is the company here. They're in the London Exchange, I believe. If I wanted to buy it, I'd buy it in the over-the-counter market. To give you a sense of what they do a variety of like gifts. They have retail, those types of things. I think you can personalize the items that you're going to be buying. And I've my wife and I have two sons, and we kind of went through the whole cycle of taking care of our boys and going through each phase. So I totally get that this is really special for families, and they appreciate this kind of stuff. Now that we're a little bit older and we have nieces and a nephew that have little kids, we're seeing them kind of help or enjoy these moments. So I get this type of business. And the company is a small cap company. We are looking at a GBX currency, which is a little more valuable than the US dollar, like $1.31. Dollars would buy you one, I believe it's British pound. So this is a market cap of probably about 440 million in US dollars. The revenue is higher than the market cap. Very low PE, super low PE, and they pay a dividend. So this is a small company. And what's interesting is the stock price has just really fallen off a cliff. Like, what happened? It was trading at 143 pounds per share, and it dropped down to 92. And it looks like it went down further today. by 1.18%. And I believe that a big part of why their stock price is going down is their profitability is really getting squeezed. Their costs are going up. And these guys have material costs, they have labor costs, those types of things. But if we look at their profitability, it's really come down. And their last earnings, they showed that, hey, our profitability is really going down. So investors are selling off based on the fact that their profits have really gone down. They are growing their top line revenue. So that's very positive. Not extreme growth. Their growth is okay, especially since it's a small company. Their growth isn't overly impressive. It's just okay, but it's positive, which is good. So revenue's good. Profitability is down. That's a negative. Looking at their balance sheet, I believe their balance sheet's in good health. Let's take a look at how much cash they have. They have 26.7 million pounds of cash, debt of 200. So they have net debt of 176. EBITDA is 59 million. So we're looking at roughly 3 times EBITDA, the amount of debt. So that's right there, just barely qualifying, but it qualifies. It's a decent balance sheet. When we look at free cash flows, let's take a look at that. So free cash flow, this company has been a consistent cash flow generator. Looks good. Now we have a drop in cash flow. That profit, that additional cost is eroding profits and cash flow. So it is bad that it's going down. I think they've got to get a better way of operating and lowering their costs. If they can do that, I think the stock will move up. If they continue to show that, hey, this is just getting more and more expensive to run this business, it's probably going to keep going down. But the severe drops in this stock price are interesting and I think an opportunity. So this is at $69 million. So if I just kind of said 70 million, it is a growing business. Their cost structure is a little bit bad, but let's say I just multiplied it times 10. I would get to about 700 million pounds is the value. So you can, just looking at the cash flows at their current run rate, this stock can double in value just to get to its intrinsic value of cash flows. So it looks like a pretty neat opportunity. Now, I don't particularly like retail companies. These guys are a retail company. They're a consumer discretionary company. And it's not my ideal sector and industry to go into. I like industries and sectors that are just expanding and they become more and more valuable. This is a neat little company, probably very well known, and people that buy their products are happy to buy them. They like buying their products. Obviously, I'm not in London. I'm probably closer to Los Angeles. So I can't tell you if these guys are just so popular that they're worth considering because their brand's so strong. So you would have to make that decision if their brand is super, super good. But it is interesting. I think it's highly discounted. And if you think that they're going to come back, they're going to get those costs in order, this would be a big winner from an appreciation standpoint, and they'll pay you a nice dividend. The interesting thing about this company, I guess they don't have any analysts that are covering it. So I don't have an analyst forecast for this company. So I'm not able to cover that. Let's take a look at the chart on Google Finance, because those severe drops, they tend to catch my attention as well, especially around companies that are good companies. Maybe they're decent companies and they're just getting hammered. And it could be an opportunity because when you look at their financials, do I see a 35% like problem in their financials? And this is like over a 3-week period. No, I don't see that kind of problem. Now, I would say that the rise is kind of equivalent to the fall, right? It really rose nicely. and then it dropped. It dropped all the value that it amassed since June. It dropped it all in the course of 3 weeks. So maybe, if you buy this stock at the right time, I think it could probably work. But you'd have to get comfortable around the business. You'd have to get comfortable that, hey, they're going to repair their business and they're going to do well going forward. And then potentially a nice swing trade. Is this a stock that, first, I don't like retail. This is not the kind of company that is the ideal investment for me. I don't know them well enough to really be able to take advantage of it, maybe for a swing trade. So I'm not an investor, but if somebody in the UK looked at this and said, hey, I think they're going to recover because, we have the holidays coming. Maybe that's going to be a really nice bump in revenue. You have a better sense of this company and how popular they are, how competitive they are. All those factors could really give you an impression that you could use, a positive impression or a negative impression. So that's a neat little company. And I think it was Bobby that wanted that company covered, and I covered it. Good luck with that. And staying in the UK, let's take a look at Schroders, which is a financial services company. And this company is up slightly today. Over the 1 year, it's down 9.28%. Over the 5 year, it's down 29%. It pays a nice dividend of 6%. It's a market cap of 5.59 British pounds. So again, we'd have to add like 31% to that. So they're probably in the neighborhood of like 7 billion in market cap. And the revenue is probably about 4 billion in US dollar terms because it's 2.93 British pounds. The PEs look pretty good. And financial services are really working in the United States. So it's interesting to see such a low PE for this company. The revenues have been flat and going down a couple percentage points. So that might be what is concerning investors. Now, I would say that when we looked at the earnings for JP Morgan and Wells Fargo, those stocks did go up nicely. But the one thing I would say is their revenues were down. It was kind of it was a paradox, so to speak, that revenues were down, but the stock price flourished. And that's because investors read into their profitability and the fact that lower rates are going to lead to a really profitable 2025. So that was my conclusion that I formed based on all the data input that I got. And that's why the stocks were really rallying. Is I think the market thinks that banks are going to do well in 2025. I agree with that. And I think what that tells me also is that the economy is going to be good in 2025. Coming back to Schroders, they are kind of showing something that I saw in the big banks here stateside. So I'm not overly worried that, hey, they're probably adjusting to lower interest rates and that kind of thing. Their exact products, maybe I could go there and we can kind of take a look at what kind of products do they provide. And I'm hoping that I could quickly understand what they do because I'm not familiar with this company. I don't know if they're a bank or if they're a brokerage. So they have private market investing, which is more like BlackRock, that type of company. They have a book of business, which is a lot like investment banking like. So this is not like retail bank oriented. They have wealth management, which is like a brokerage services. They have capital, which is like investment banking, that type of thing. All right. So that's who they are. The revenues are not expanding, but let's take a look at the rest of their financials. What about their profitability? Is that expanding or is that kind of getting hit? So earnings per share have been going down over the last couple of years. And that is probably weighing on the investors that are selling off the stock. They'd like to see this expand. Last couple of years have been fairly good for financial services. Well, I should say 2023 was rough for banks, but brokerages did fine because you had a really vibrant stock market and stocks are really up. And 2024 is playing out to be really good for financial services. So to see earnings per share, uh, go down, that the profitability rate is going down, that is a concern. So that's a red flag. Not too concerned with the revenue, but I am concerned about their profitability. Cash flow wise, free cash flow, oof, they had a bad year in 2023. That might have been the beginning of investors becoming skeptical, concerned. But other years were really good. 19 was good, 20 was good, 21 was good. Then they had a bad year. So let's take a look at that bad year in 2023. So they had some type of change, probably a write down, some kind of accounting change that caused this. When I look at this semi-annual, it's in Britain, so they report twice a year. Like in the US, New York Stock Exchange, we see companies report 4 times a year. And when I look at the quarterly, I want to see positive growth. Yeah, it is. It is there. So real good last half of 665. Very good. So cash flow is looking good for this company. And if I take the cash flow and do kind of a very quick estimation, financial services, if they do like investment banking, wealth management, I would think they're worth somewhere in the neighborhood of like 10 to 12 billion. And again, this is in British pounds, 10 to 12 billion. And they're way below that. So interesting. This one, this one's interesting. And again, this is outside my home country. I'm in the US. So I don't know these guys like I know Robinhood or I know, let's say, Charles Schwab or those types of companies or BlackRock. Um, so I don't have that intuition when it comes to this company. Are they good? Are they bad? Are they popular? Or people are really saying bad things about them? You'd have to form that conclusion for yourself and think, is this a good company or a bad company? So this one here looks discounted. I'd also look at peers for Schroders. I'd probably want to look at least two other peers and see what the peers are doing, if their prices are going up, if their valuations are similar or different. I would do that before I made a decision on Schroders because if the whole space is down, I'd want to understand, why is this whole space down? Is there some type of big causal factor that's keeping the whole industry down? Or is it, hey, everybody else is doing well, Schroders is behind, they're misunderstood, and I think they're going to rally, or there's something broken with the company, and that's why the stock's down, is it's broken and it needs to be fixed. Do I want to wait around for it to be fixed? But I think there's enough there for an investment in time and analysis to see what's going on. This is not a tiny company. I mean, it's a pretty good size company for being a small mid cap stock. I think there's enough there for good investment of time into Schroders, which could potentially lead to an investment in capital. For me, it's not inside my wheelhouse. I don't know Britain that well. I don't know their financial markets all that well. I'm a little bit of a fish out of water. When I go outside my home country, I tend to invest in big companies that I know. So in this case here, like Rio Tinto, I believe, is a company that's headquartered in UK. I know them. I'd be comfortable investing. It's a big cap. It's a materials company, a mining company. I'm comfortable with that. Or Rolls-Royce is a company out of UK. I'd be comfortable with Rolls-Royce. Rolls-Royce is a big winner over the last couple of years. I don't think that investing in Rolls-Royce at this point is a great idea for me. But those are two examples of, hey, I know those companies are bigger, well known. With Schroders, for me as a US investor, it's too It's too unknown for me. But for somebody in the UK, especially Bobby, man, these are two companies that are discounted. I like Schroders more than the other because Schroders, I think, stands to be more profitable and probably gain more value over time. So good luck with those. And catch up on some comments here. Till the end. Good to have you. So you're looking at TIGR. I want to say that I know that symbol, but let me look at it first. And then Android PC. So SIM is some symbiotic. It's an AI stock. Okay. Yeah, okay. Okay. Great. And it looks like Android PC, you like penny stocks. All right. So let me change my view here, make it a little bigger, and let's get into it. All right. So we went over SoFi, and the conclusion, I'm gonna give you a high level on SoFi. And if you want to go deep, take a look at the live stream recording on that I had with Scott's due diligence, and I'll even go beyond that. He on his live stream, he went further into SoFi. He created a video actually on SoFi. He did a really nice job. And the story on SoFi is if they execute their business plan, this stock's going to work. If they don't, this stock's going to continue to bump along the bottom. I think that's kind of like the story with most businesses, small businesses, I should say. They have to kind of prove themselves. Now, SoFi's had erratic kind of stock prices. It's really done well recently. So if you're like a swing trader, probably SoFi is looking like a really interesting stock, or you're a trader. You're like, man, I like this volatility. I can make money shorting or taking a position for a short period of time as it goes up. That's not my investing, philosophy. My philosophy is, do I believe SoFi is going to flourish and more than double in value over the next 5 years? At this point, the answer is no. I haven't seen enough. They haven't proven enough, and we'll see how they get there. Now, Scott, with Scott's due diligence, did a fantastic job on his video. His conclusion was, if they execute, it's going to be a very good stock. So what I'm doing is I'm going to watch SoFi and see where their earnings come out. When do they announce? They announce on the 29th. So maybe on the 29th, what they're trying to do is trying to show that they are going to be profitable. And that's the same thing. Robinhood, Uber, I mean, just go down the list. If they can accomplish that, that's going to be real positive news. So on the next earnings, it's about, seeing how close are they to their profitability. If they show, hey, we're going to be profitable next quarter or the quarter after, look how close we are. I think the stock's going to really rally. They are growing. So that's positive, but they're not growing by leaps and bounds. They're growing by 30%. And, we'll see. We'll see. Right now, I'm not buying into SoFi. I want to see more information on the next earnings. So let's look at SYM. And I think we did look at this one. Symbiotic. Okay. So they do warehouse technologies. Okay. All right. And they're really sold off. But for the last 30 days, it's really up. Okay. So they're going to announce on November 18th. Symbiotic is being sued for violating securities laws and affecting shareholders are urged to contact. Okay. So a law firm's putting together a class action lawsuit. So this stuff that they do in the warehouse, it's not new. They're calling it AI, right? Or at least the press is calling it AI, but it's been around for 30 years. So it's not like new. Okay. So all right. So this is what they do. They do technologies around the warehouse, $3 billion market cap, $1.6 billion revenue rate. And they don't have a PE. They probably lost money this year. And next year they're going to have a very small profit, which is going to drive this very high PE. Analysts like the company. They think it's heavily discounted. Their growth is really good. Very high revenue growth. That looks good. And looking at their balance sheet, let me look at it this way. I like this view a little better. So they have a lot of cash and almost no debt. Very good job. That way they can operate for as long as they need to get their business up to scale. Cash flow wise, so they are cash positive. That's very good. This is my kind of company. They're in technology. They're in business to business, meaning they're selling to businesses that want to optimize their warehouses. Warehouses are super important now, right? With all e-commerce going on, it's really important. And these guys are trailing 12 months, 69 million. But what I would say is, based on the growth rate that I was seeing, is once they get to scale, their free cash flow is going to be substantial. Like they're going to get to a couple $100 million of free cash flow quickly, based on that. Based on the growth rate that I saw. Now, when I look at the quarterly, it's all green. Okay, good. It's positive, I should say. Okay, good. Yeah, this one's interesting. I'm going to take a closer look because it is small, very small cap. I like the industry. I like industries like this where they kind of create some IP that's valuable, and then they're able to sell that IP in the form of software and that type of thing many, many times over again. So I'm going to take a closer look at this one. I think it's worth my time and kind of analyze it. I'd have to do a cash forecast in order to say, is it discounted or not? But I could tell you that if the forecast that I could put together, if they're going to generate a couple 100 million, let's say 200 million to 300 million in free cash flow in the next 12 months, this stock's actually worth like $5 to $10 billion once I go through that evaluation. Now that's going to take some time and energy, and I want to look at their investor page to see more details. But that's what I think may be the case, and if it is, I want to start tracking this company and watching it, because it would be a pretty good stock to own for a while if they're going to make it. You can see the stock really traded up to like $50 per share. So this stock could really get back to that $50 per share rank. And for them, right, warehouses are not going away. It's a very fertile growing industry where warehouses have to keep getting better because volumes going through warehouses just keep increasing, because preferences from consumers, shoppers, businesses is to buy online and have things delivered. So really a lot of things kind of making this one attractive to me. I put a little star next to it, and I'm going to do some homework on it. So thanks for asking about Symbotic. Interesting little company. Let's go to TIGR. So this one is a Chinese company that does software, so it's a brokerage services company in China. And this one, once Chinese stocks started to work, it kind of went through the roof. Boom. And it's really settled down. This is a really small cap, revenue 250 million. Um, it was a low dollar stock, and then it got up to like $12 per share. Now it's back down to 8. Where's it going to go? Just really, I think this is going to ride how positive Chinese stocks do. If Chinese stocks do well, this company is going to do well. It's not a fast growth company. It's a growing company, 13%, but I would take that back. I think that the announcement of their earnings, right? So we have so these guys are announcing every quarter. They're going to announce on the 25th of November. And based on the inflows into China, their revenues are really going to pop because the inflows are so high. A brokerage makes money when transactions are executed. And I think Up FinTech is probably going to have a huge quarter, sort of, because they only caught like the very end of September in Q3, but they're probably going to guide for Q4 and talk about some of their volumes that they are seeing in October. By the time mid November we get to that point, they'll be able to comment on where their run rate is with regards to Q4, which is what we're in now. So this one looks interesting. Now, this is high risk for me as a US based investor. This is a low stock price. I don't like that. Red flag. This is a small cap outside my country in China. I don't like that. I'm not familiar with the company. I don't like that. This potentially is going to be a big winner. Okay. So if you want high risk, high reward, here's a stock for you. I'm not sure I want high risk, high reward. I want risk adjusted returns. And, just frankly, I'd rather be invested in Baba or a bigger business that I know many investors have done their diligence on. I could see what they are doing with the stock as opposed to this one. This is just kind of a guess. There's one analyst covering the company and he thinks the stock is overpriced. So there's just not a lot of data. This one here is somewhat, I'd have to make too many guesses and too many assumptions. And it's not, if it was in my home country and I kind of knew this industry super well and I had a good sense of what I think is going to happen, maybe. But this one here, it's just going to be too risky for me. I think for some investors, it's going to reward them or either reward them or make them pay a big price. Whoever was in the stock here obviously is just rocking and rolling. They tripled their money in a couple weeks, but now it's settled down. What are Chinese stocks doing now? Let's take a look. Baba's kind of earning back some of its money. JD is doing quite well. NetEase, Li Auto is doing well. So as these inflows continue to expand, this company is going to continue to make money. So it's interesting that it's down 9%. Man, that's a big drop. Well, there you have it. High risk, high reward. Compliments of TIGR. All right. So thanks for bringing that one up till the end. Nice and risky. Nice way to start a Monday. All right, cool. So I think we could, let me make sure. I wanted to look at two more stocks that I came into the call, wanted to take a look at. One of them is really an extension of, I believe we looked at this either on Saturday or yesterday. It was talked about. Double Verify. It serves up the media when people are investing in a company. And this came up in the member only conference call. We talked about it. And it does data analytics. So businesses are advertising online on YouTube, Netflix, Amazon Prime, Facebook, Instagram, TikTok, and all kinds of things. And what's interesting, what's the stock doing? Not much. This stock here, this is a homework item that I have because this looks really, really interesting. The company has been discounted substantially. And I think the threat of TikTok being banned in the US, this is what's causing potentially this big drop. I guess a lot of their customers use this platform to advertise on TikTok. And if TikTok goes away, a lot of the customers will be like, hey, I want to advertise elsewhere. And you guys are really good at advertising in TikTok, but I no longer need that. Now, if you follow the TikTok decisions, that's going to tell you, I think, where this stock is going to go. So that's why I thought this one was interesting that, hey, I'm going to keep track of this because who knows what happens with TikTok. I think it'd be really unpopular if TikTok was banned. A lot of people like TikTok. I know what it is. I think it's neat, but I can only like watch it for a few minutes. I'm not like hey, I just want to keep watching like 30-second videos. It's too short. I'm like, man, I get exhausted from watching different TikTokers, so to speak. I guess I'm old school where I've grown up where TV shows with 30-minute segments, or maybe you watch a ball game and it's a couple hours long. So you can kind of have that kind of expectation. TikTok, it's like, bam, 30 seconds, 45 seconds, in, out. They usually are pretty sensational and active. And yeah, it's kind of good for a couple laughs, but then I want to move on like 5 minutes later. But these guys here, really interesting business, small business. I think they could really rise. There's positive news that is going to let them keep doing what they're doing. This stock could really work. And then the last one is going to be MSI. So MSI, Motorola. This is a old school company that's really been rocking. Look at that chart. 62%, 78% market cap, revenue is 10 million. And their PE is high this year. It's going to be high next year, 84 cents. They're coming out. I believe they announced they have a foldable phone, which is interesting. Motorola at one time was a really big player in mobile phones, and they're a big player in like business technologies. They provide public safety and enterprise security solutions in the United States. So they really have gone into security, communication equipment, technology sector. Wow, they're really doing well. Good for them. So the revenue growth has been there over the last couple of years. They're a pretty good sized company. They're growing at 8% and they're a $10 billion company. So that looks good. Cash flow wise, wow, look at that growth in cash flow. See, the market really rewards companies that have nice, smooth data. And this is 2.3 billion in cash flow. They're not growing all that much. So I'd probably give them a valuation of 40 to 50 billion. And they're way up there at 78. So all the gains are priced into this stock. But whomever's in Motorola, congratulations. Look at that. Beautiful upward chart. Very nice. This is what I'm looking for. And this is an old school company with, technology that customers appreciate. Consistent growth in cash flows. Very low dividend because their stock price is so expensive now. Very good example, but it's probably late to get into this stock for me. So it's good to look at, but not a stock for me to really entertain buying. All right, so let me take a peek where we're at with the stock market. US, we are, the Nasdaq's up 0.59. S&P is right there with it. The Russell is down. See that Russell? It could open up, green, and now it's down a little bit. Dow is pretty much flat. And we already saw Asia, what it did. Let's look at crypto. So I think the update on crypto within Google for some reason is kind of broken. Let me show you. So you see the chart is way up here at $65 per coin, but it's showing 63. So somebody's got to go reset something on the Google Finance app. So Bitcoin is $65,412 per coin. Looks good. All right, good day for crypto. All right, everybody. So I appreciate you joining. Again, let me remind you, if you want to engage with the investors that kind of follow this channel and community, Discord's a great place to see a lot of the back and forth throughout the trading day, and as well as after trading hours. I appreciate you watching on YouTube or Twitch or Facebook, whichever one you're watching me on, and consider being a paid sponsor. I think it'd be worth your subscription fee every month, and specifically the advanced investor. You can attend the community paid member conference call, and I'm going to have the first workshop this Saturday where it's going to be a little bit of the attending members would kind of go through something that they're trying to maybe learn or improve on, and we'll go through that, valuing a company based on earnings per share or free cash flows, or evaluating financial statements, getting to know financial statements better. Those types of discussions are going to be had on Saturday. And then on Sunday is going to be the member conference call, and we really take on topics that we think are worth talking about. With so many earnings calls coming, there'll probably be a couple good topics that we're going to take on. If you want an example of that, look at the podcast that I released yesterday. That was the member call that was recorded, and I released it as a podcast. So you can take a look at that, but you can be involved. You can bring your ideas and be part of the conversation if you're an advanced investor member. So please consider that. So with that, let me wish you guys a very nice Monday. I hope your trades work out. I hope you make a lot of money. And everybody kind of take it easy today, because tomorrow is going to be big. The announcements tomorrow are going to be huge. And it's going to stay that way for a month. It's going to be just a marathon of earnings calls. So take a deep breath, and it's going to be an exciting day tomorrow. And I appreciate you spending your first hour of the trading day with me, and good luck. Take care.